Let's start with the basics. A Roth IRA is a special type of retirement account that allows you to save and invest money for your future. Unlike traditional IRAs, the money you put into a Roth IRA is taxed up front, but your investments grow tax-free. When you retire and start withdrawing funds, you won't owe any taxes on your earnings, as long as you follow the rules. This makes the Roth IRA a powerful tool for building wealth over time, especially if you expect to be in a higher tax bracket later in life. Now, you might be wondering how a Roth IRA is different from other retirement accounts. The main difference is when you pay taxes. With a traditional IRA, you get a tax break now, but pay taxes later when you withdraw. With a Roth IRA, it's the opposite. You pay taxes now, but your withdrawals in retirement are tax-free. This unique structure can be a big advantage, especially if you think your income will grow over time. Not everyone can contribute to a Roth IRA. There are income limits set by the IRS. If you earn too much, you might not be eligible to contribute directly. For 2024, single filers with a modified adjusted gross income below $153,000 can contribute, and married couples filing jointly must earn less than $228,000. If your income is above these thresholds, your contribution limit is reduced or phased out completely. Each year, there's a maximum amount you can contribute to your Roth IRA. For 2024, the limit is $6,500 if you're under age 50 and $7,500 if you're 50 or older. These limits apply across all your IRAs combined, not just Roth accounts. It's important to stay within these limits to avoid penalties from the IRS. Opening a Roth IRA is straightforward. You can set one up with most banks, credit unions, or investment firms. The process usually involves filling out an application, providing some personal information, and linking a bank account to fund your contributions. Many providers offer online platforms, making it easy to manage your account from anywhere. With a Roth IRA, you're not limited to just one type of investment. You can choose from stocks, bonds, mutual funds, ETFs, and more. This flexibility allows you to tailor your portfolio to your risk tolerance and retirement goals. It's wise to diversify your investments to help manage risk and maximize growth over time. One of the biggest benefits of a Roth IRA is tax-free growth. As your investments earn dividends, interest, or capital gains, you won't pay any taxes on those earnings as long as the money stays in your account. Over decades, this can make a significant difference in your total retirement savings. To enjoy tax-free withdrawals, you need to meet certain requirements. First, your Roth IRA must be open for at least 5 years. Second, you must be at least 59.5 years old when you start taking money out. If you meet both conditions, all your withdrawals, including earnings, are completely tax-free. What if you need your money sooner? With a Roth IRA, you can always withdraw your original contributions at any time, tax and penalty-free. However, if you take out earnings before age 59.5 or before the account is 5 years old, you may owe taxes and a 10% penalty. There are some exceptions, like for a first-time home purchase or certain education expenses. Unlike traditional IRAs, Roth IRAs do not require minimum distributions during your lifetime. This means you can let your money grow as long as you want, and even pass the account on to your heirs. This feature gives you more control over your retirement planning and legacy. If you pass away, your Roth IRA can be inherited by your beneficiaries. They'll generally be able to withdraw the money tax-free, though there are some rules about how quickly they must take the funds. This makes a Roth IRA a valuable tool for estate planning. If your income is too high to contribute directly, there's a strategy called the backdoor Roth IRA. This involves contributing to a traditional IRA and then converting those funds to a Roth IRA. It's a legal workaround, but there are tax implications to consider, so it's wise to consult a financial advisor before proceeding. How does a Roth IRA compare to 401(k)? The main differences are in contribution limits, employer matching, and tax treatment. 401(k)s often have higher contribution limits and may include employer contributions, but withdrawals in retirement are taxed. Roth IRAs offer tax-free withdrawals and more investment choices, but lower contribution limits. Roth IRAs are especially attractive for younger savers. If you're early in your career and expect your income to rise, paying taxes now at a lower rate can be a smart move. Plus, the longer your investments have to grow tax-free, the more you'll benefit from compounding. Unlike some retirement accounts, Roth IRAs offer flexibility. You can withdraw your contributions at any time without taxes or penalties, which can provide peace of mind in case of emergencies. However, it's best to leave your money invested for retirement if possible. There's no age limit for contributing to a Roth IRA, as long as you have earned income. This means you can keep adding to your account even after retirement age, which isn't the case with traditional IRAs. If you're married and your spouse doesn't work, you can still contribute to a Roth IRA for them, as long as you have enough earned income. This is known as a spousal Roth IRA and can help both partners save for retirement. You can fund your Roth IRA with regular contributions, transfers from other IRAs, or rollovers from qualified retirement plans. Just remember, rollovers and conversions may have tax consequences, so it's important to plan carefully. Some common mistakes with Roth IRAs include exceeding contribution limits, missing the income eligibility rules, or withdrawing earnings too early. Staying informed and double-checking your contributions can help you avoid costly penalties. Did you know you can open a Roth IRA for your child if they have earned income? This can give them a huge head start on retirement savings, thanks to decades of tax-free growth. It's a great way to teach kids about investing and financial responsibility. While contributions to a Roth IRA aren't tax-deductible, the tax-free growth and withdrawals can outweigh the upfront cost. This is especially true if you expect higher taxes in the future or want to avoid required minimum distributions. You can use Roth IRA funds for qualified education expenses without paying the 10% early withdrawal penalty, though you'll still owe taxes on the earnings. This flexibility can make a Roth IRA a backup option for college funding. A Roth IRA allows you to withdraw up to $10,000 of earnings, penalty-free, for a first-time home purchase. This can be a helpful resource if you're planning to buy your first home, though you'll still need to meet the 5-year rule. You can roll over funds from other retirement accounts into a Roth IRA, but you'll owe taxes on any pre-tax amounts. This can be a smart move if you want to consolidate your retirement savings and take advantage of tax-free growth. It's important to keep track of your contributions, or basis, in your Roth IRA. This helps you know how much you can withdraw tax and penalty-free at any time. Good record-keeping can prevent headaches down the road. In a divorce, Roth IRAs are considered marital assets and may be divided between spouses. It's important to handle these transfers correctly to avoid taxes and penalties. Consulting a financial professional can help ensure a smooth process. When you inherit a Roth IRA, you'll generally need to withdraw the funds within 10 years, but those withdrawals are tax-free. This makes inherited Roth IRAs a valuable legacy for your loved ones. Roth IRAs can play a key role in estate planning. Because withdrawals are tax-free and there are no required minimum distributions, you can pass more wealth to your heirs. Naming beneficiaries and keeping your account up to date is essential. There are some common myths about Roth IRAs, like thinking you can't contribute if you have a 401(k), or that you can't access your money until retirement. In reality, you can contribute to both, and you can withdraw your contributions at any time. To sum up, a Roth IRA is a flexible, tax-advantaged retirement account that can help you build wealth for the future. By understanding the rules and making the most of its benefits, you can set yourself up for a more secure retirement. Consider your own financial situation and goals to decide if a Roth IRA is right